The $875 billion commercial real estate refinancing wall. And is this an opportunity or is it a crisis? And over the next several years, nearly $875 billion in commercial real estate loans will mature. And many of these loans were originated during historically low interest rates. And today's market looks dramatically different. And for commercial property owners, investors, and developers, the coming refinancing wave presents both significant challenges and tremendous opportunities. And in Medallion Funds, we help borrowers navigate complex commercial financing situations by providing access to hundreds of lenders and customized financing solutions designed for today's market. So, what is the commercial real estate refinancing wall? And the term commercial real estate refinancing wall simply refers to the enormous amount of commercial mortgage debt that's scheduled to mature over the next few years. And many borrowers finance properties when interest rates were really near historic lows. I might suggest all time lows. But property values were increasing rapidly at the same time, and banks were offering aggressive leverage. And debt service coverage requirements were easier to meet because interest rates were so low. And today, many of those same loans must be refinanced under completely different market conditions. So, why this matters is where we're going. And today's lending environment includes higher interest rates, and monthly debt service has increased substantially, which is making refinancing more difficult for some properties. But along with the rise in interest rates, property values shrunk a little bit. So there's lower property values. And certain office buildings and challenged retail properties have experienced pretty dramatic declining valuations, reducing the amount of loan that they could get on the property. More conservative lending. And many lenders have tightened their underwriting standards by requiring higher debt service coverage ratios and lower maximum loan to values. They're looking more for greater borrower liquidity and stronger sponsorship with better track records and operating histories for that property type. So, which property types face the greatest risk? Well, some sectors face greater refinancing pressure than others, and these include office buildings, older retail centers, or hotels with inconsistent cash flow, or value add multifamily or mixed use properties, or really any transitional asset. Meanwhile, industrial and medical office and self storage and well performing multifamily properties generally continue to attract a wide lender interest. And refinancing doesn't always mean rate shopping, and many owners focus solely on finding the lowest interest rate. And successful investors are going to evaluate the entire capital stack, which includes looking at the loan term and the amortization, and if is it a fixed or a floating rate? Are there any interest only options? Do we have prepayment penalties? Do we have future refinance flexibility? And what do our cash reserves and our exit strategy look like? And often the structure matters more than the interest rate itself in getting a deal approved. Financing options that are available right now. Well, every property is different. So depending on the situation, solutions may include conventional bank financing, which is really ideal for any stabilized or owner occupied or investment property, or credit union loans. And these have competitive rates for strong borrowers, or life company financing. And these are excellent for stabilized institutional quality type assets. And CMBS loans. These are useful for larger investment properties seeking a long term fixed rate type offering. There's also agency financing, and these are excellent for qualifying multifamily properties. And there's SBA loans. These are ideal for owner occupied commercial real estate transactions. And there's bridge loans. And these are perfect when additional time is needed before we can get you to permanent financing. There's also private lending. And these are useful for complex transactions that banks would have turned away from, is really the concept. Now, the next topic is why work with a commercial mortgage broker. And many borrowers make the mistake of approaching only one bank. and getting one offer. And commercial mortgage brokers can provide a broader spectrum of options, as well as including hundreds of lending sources, from banks to credit unions to life companies to debt funds to bridge lenders to SBA lenders to agency programs and private capital. And rather than trying to fit your property into one lender's guidelines, we match your property with the lender that's most likely to approve your transaction. So the refinancing wall also creates opportunity. And that's another thing in life. You got to think about, see the opportunities for them to appear. But periods of market disruption will create opportunities. And investors with financing already in place may be able to bid and purchase distressed assets, or acquiring a discounted commercial property because they've got a maturity that's due, or negotiate favorable seller financing, or refinance competitors were unable to qualify elsewhere, or to expand portfolios during periods of reduced competition. And preparation creates opportunity. And how medallion funds can help you. Well, at Medallion Funds, commercial financing is what we do. And we help clients finance multifamily apartments and retail buildings, industrial, office, and hotels and self storage, but also medical and mixed use construction type properties. We offer bridge financing and SBA loans, and we can definitely help you refinance a property. And with access to over 600 lending relationships, we help identify financing solutions that are tailored to each property's unique circumstances. So, final thoughts for the day. The $875 billion commercial real estate refinancing wall will reshape the commercial real estate market over the next several years. And some owners will struggle, and others will capitalize on new opportunities. And the difference often comes down to simply just planning early and partnering with an experienced commercial mortgage advisor like myself. And if your commercial loan matures within the next 12 to 36 months, let's have a conversation. Now is the time to begin exploring refinancing options, and not after your maturity date arrives. Are you ready to discuss your refinancing strategy? Well, please reach on out. My website is billrapponline.com. You can schedule a consultation there so we can have a conversation. And I look forward to that day. Have a good day.